The broadcast is now starting. All attendees are in listen-only mode.
She wake up and wanna speak Spanish. Como se llama? Bonita. Shakira, Shakira.
Oh, baby, when you talk like that, you make a woman go mad. So be wise and keep on reading the signs of my body. I'm on tonight, you know my voice don't lie, and I'm starting to feel it's right. All the attraction, attention, just see me, this is perfection.
I can see your body moving, and it's driving me crazy. And I did not the slightest idea until I saw you dancing. And when you walk up on the dance floor, nobody can stand the door. The way you move your body, and everything's so unexpected. The way you right and left it, so you think you are taking it. Never really knew that you could dance like this. She make up and wanna speak Spanish. Como se llama? Bonita. Because Shakira, Shakira.
Oh, baby, when you talk like that, you make a woman go mad. So be wise and keep on reading the signs of my body. I'm on tonight, you know my voice don't lie, and I'm starting to feel you boy. Come on, let's go, real slow. To see me, this is perfect. They know I'm on tonight, my hips don't lie, and I'm starting to feel it's right. All the attraction, attention. To see me, this is perfect. Oh boy, I can see your body move. Yes, I do, yes, ma'am. I don't really know what I'm doing. Just like to have a bam. My will, self-restraint. Have come to fail now. See, I'm doing what I can, so you know I'm taking too hard to explain.
All right. Greetings, everybody. Yeah, well, we always play Shakira. If you don't understand why, you need to hang around us more. All righty. So, greetings, everybody. Hope everybody's doing okay tonight. I hear you, Matt. All righty. You got that right, Ms. Beta. All right. So, as advertised, and I didn't do a good job of advertising today, but it seems like a few people got the message anyway. So, tonight we're going to do a session from Mr. Clay, who will come on here in just a moment and go over what he's going to do. But I just want to comment, I'm sure Clay will tell you, that he is a student who epitomizes the concept of being the MacGyver, being the Magellan, being the CEO of his own $10 million trading company in terms of he takes what he's taught and he tests it left, he tests it right, he tests it up, he tests it down. He asks questions and he pursues with vigor, not getting off course too much. And so he's here to talk about something that we've had in the harmonic wave convergence world for maybe 5 years, but I haven't cycled back and reviewed it a lot. And Clay has spent some serious time with it. And since he's done that and done a good job with it, I think it's appropriate to have him talk about this particular kind of trade concept within the world of harmonic wave convergence. So tonight we are here this evening or morning or afternoon, depending on where you are, to talk about a particular kind of 5-minute trading using harmonic wave convergence that inside the Tab 29 community has affectionately become known as the Clay Way. And so I'm going to go ahead and make Clay, I believe, the presenter. I think that's just what I tried to do. Clay, can you hear me? Are you getting the nod to become presenter? Maybe not. Huh. Is it not showing up on your screen, Clay? I don't understand. I don't understand. Let me see. Let me try something else here. It's not putting you over. Why is that? You're seeing my screen. Y'all are hearing me. The session is being recorded. Clay, can you hear me?
Test.
Yeah, I can hear you, but you're not getting the signal to be presenter, are you? Wow. This might be a short class. Let me see here. Wow. Let me do it here. Well, they've obviously changed some things on the panel. It says, make another attendee the presenter, available when there are qualified attendees. Never used to do that. You all hang in there a second. Little technical difficulties. See what happens here. All right, Clay, I'm going for the deep dive here. This is seriously an issue. Oh, wait. All right, Clay, I think I got it. I think I figured it out. Sorry about that, guys. Here we go. Session should be yours, Clay.
Let me see. All right, which screen do you see?
The rear view mirror one.
Cool. Cool. All right, then we're good. Ready to go.
It's yours, Clay. Go to it.
Okay, I need to do something real fast. Hold on just a second.
All right.
Since you get to play music, Steve.
Uh-oh.
All right, that's it. I'm good. All right. So, welcome everybody. My name is Clay Taylor, and we're just going to jump right into this. So, this is 5-minute retrace extreme trading, also known as the Clay Way. So, we're just going to dive right in. So, real quick intro for the people that haven't watched or met me before. 25 years old. I live in Oklahoma City, Oklahoma. I started my Forex journey in June of 2017. I traded in the old paradigm for about 4 months, and then eventually found Steve on IML TV in September of that same year and began to learn how to trade scans at pitchforks. Joined Shredder and Pip Club in December of 2017 and began taking beginner level trades, demo trades in January 2018, and I progressed through all that and made it to tab 29, which is part of the Shredder program in May of 2018. So this is going to be, I wouldn't say advanced. I don't know what you would say, call it, Steve, but basically prerequisites for what I'm about to show. This I would lean towards more. This is an advanced understanding of what's going on the charts. So an understanding of waveology. You have to understand how waves interact with each other. You have to understand direction of impulsivity as a result of understanding waveology. For example, where am I in the cycling process? Are there snaking waves? Where is the most recent 30-minute convergence, 240 convergence, stuff like that? You have to be able to mentally answer those questions at a subconscious level. Correct mental approach to trading. You have to be able to sit down and say, I'm going to execute at a high level. I'm going to execute my plan, and I'm not going to let emotion enter my trading. I'm going to do exactly what I plan to do, and I'm not going to let distractions, Facebook, your phone, people, whatever it is that can easily distract you from executing at a high level, do away with that. Block it out. And then number 4, we can see, are there channels to trade in? If you're trading at a very flat time in the market, obviously that's going to hurt you more than what's going to help you. And same thing with wicks. If it looks like a heartbeat monitor, probably not the time to be trading. Pre-established money management kind of connects with number 3 there. Have it written out, have it memorized, have demoed it. And then last and the most important one, number 6, demo and develop knowledge of system performance before you do everything, not just this. This includes pitchforks, scans, everything. So number 6, critical. But for all of this, all this on the screen right here, I have to have all of this or I will not trade. So just kind of going over that real fast. So, and then the mindset, I've talked about this with the tab 29 and people, the daily bread mindset, basically give me enough for today, but no more than that. This helps suppress greed, pride, ego. Basically, the pips are there, guys. What I'm going to show you, the pips are there every day. They're there every day. And it's not like we should just get greedy with it and just go run around and trying to collect every single trade. The pips are there every day. You get your daily pips and then get off the charts and go live life. But at the same time, you have to have full trust in the indicators, your knowledge, KSP, so going back to the previous slide, and the compound effect. So over time, good habits are going to yield the results you want in your broker, but also in your life in general. So trust the process, essentially. Steve talks about constantly, the 5 pips a day, 5 pips a day. Guys, that is absolutely true. So we're going to kind of get a real overview of what I looked at and what I researched and what I've been trading now for a while. And then we're going to look at some examples. So my personal focus was not necessarily harmonic wave convergence, for those of you that know what that looks like. My focus was the impulsive side and retrace extreme trades, and I'll show you what those look like in a minute. So what I did was I combined tab 29 and fast 33, so you're going to see both. So don't get freaked out by that. I prefer, it says 15 minutes, actually 30 minutes I prefer 30-minute and 15-minute time frames for scans, the 5-minute for identifying retrace extreme trades, and for helping me identify 15-minute and 30-minute moves. So a little bit larger moves, and I'll show you guys it. And then it's easier to see the 5-minute on fast 33 without the 10 or the 30-minute. On tab 29, Steve, sorry, I know you're coming out with some stuff that's going to help with that, but most importantly for the research part, I'm constantly asking myself, where in the waveology or the cycling process where am I in that process? And I can't answer that process. I don't trade. If I get confused and I don't know what's going on, why in the world would I want to be risking my hard-earned capital if I don't understand what's going on? That's where I'm at with that mentality. So continued. So this is actually adding on top of fast 33 and their Bollinger Bands. What we're going to be looking at is Bollinger Band hits, and this is going to look a little strange, but Bollinger Bands serve as rolling extremes. So if you've gone through the fast 33 or tab 29 trading, you understand that on both sides, on the top and bottom of the indicator, you're going to have little zones that are blue or red, and those are the extremes. And when waves meet in those boxes, it's called a harmonic wave convergence. Okay, so Bollinger Bands serve as rolling extremes. What that means is a wave doesn't necessarily have to be at the red or the blue box. It can be tagging a Bollinger Band, and that is considered the equivalent of a extreme. And so it kind of floats along with the waves, and you'll see what I'm talking about in just a second. So add that on top of the static 89.11 that we have right now. So your 89.11 are those two zones. They're not necessary in qualifying a retrace extreme trade, but they do help. And I'll get to this in just a second as well. You're not going to catch every one of these. Not every single time it's going to hit the Bollinger Band, but when it does, it'll just be just right in front of your eyes, and you'll be amazed. So add this to the lower highs and higher lows criteria in your pieces of 10 training that you get in tab 29 and also fast 33.
Hey, Clay.
Yo.
Let me answer a question here. So you all know Clay can't see the questions the way GoToWebinar is set up, the way we set up this session. So I will be translating them for Clay and also determining if he needs to stop and answer them where they are, or if they could wait till the end. So patience a little with your questions, but fire away, definitely. So there's a question, is the process the wave count as in Elliott wave? No, you have nothing to do with wave count, and I wholeheartedly recommend you avoid Elliott wave unless you've got about 5 years of trading under your belt. So don't be tempted. It's just going to lure you in, and it's going to set you back not only as long as you spend on it, but then you're going to have to recover and get your brain back. So if you go and spend 6-9 months on Elliott wave, it's probably going to take a year and a half to get out of it. So don't waste your time with Elliott wave. We will talk sometimes about a pullback as a wave 2 pullback, but we're just talking about a pullback in an impulsive move. We really don't care what the wave count is. So it has nothing to do with Elliott wave. No, the Bollinger Bands are not, but Clay will get there.
You trust me, guys. You'll see everything. Just I gotta give you a foundation for what we're gonna look at, because it's gonna be a lot for some people.
Okay, so. Clay, hold on. So when he talks about where we are in the wave process, if you understand fast 33 or tab 29, it means where are we? Do we have a 15-minute wave? Are we cycling away from a 15-minute wave, or are we cycling to a 15-minute wave? So that's what he means, where we are in the wave process, in relationship of a 5-minute wave and a 15-minute wave, or a 5-minute wave and a 10-minute wave. Where are we? Is the 5 minute cycling the wave up? Is it 5 minutes cycling the wave down? Is it 5-minute wave and a retrace for the 15 or 10-minute wave? So that's what he means about talking where we are in the wave cycles. Okay, sorry, Clay.
No, you're good. So let's do part 2. Okay, so what I did was I took the Bollinger Band knowledge that I had been that Steve helped me with, and I looked at moves across, I can't tell you how many pairs, and noticed a pattern that appeared on about 65% of them. At the termination of the retrace corrective side, peak 1, which is the 1-minute wave, is usually at extreme and will create a divergent pattern between peak 1 and price. This pattern will not always be there, but is a great indication of a reversal and termination. And then about 35% of the time, there's usually an energy point bounce without divergence appearing. Fibos, forks, trend lines, everything that we have in our tool belt now work great at catching both of these patterns that show up. Okay, so here we go. Buckle up. I gotta find my ink to go.
Buckle up, Buttercup.
All right. Cool. So let me go back here. All right, so this is gonna look like a lot, but bear with me. I'm gonna break it down. Okay, so right here we've got, oh, let me make that thicker. We got the 30-minute, the 5-minute, and the 1-minute. And I think when I originally taught this, Steve, I taught it with a 15-5-1, but I recently have moved to a 30.
That's fine.
So you got your 30-minute time frame here, your 5, and your 1. Okay. Here on the left, we've got tab 29, and then you have the 240 wave, which is this green wave right here, and you have the 30-minute wave, which is this light blue wave here. The indicators, just for indicators' sake, I'm just going to say it. I've got shadow bands and INS 2.0, but the only thing I have running right now on both of those is the 21 and the 34 shadow band, Steve, and then the harmonic targets. That's basically what I just run with unless I need more.
Which everybody has access to.
Right. And so you have access to this. You can use it. The only difference is if you just have Fast 33, you won't be able to see this stuff on the left, the 30-minute level. So on the 5-minute chart, again, INS, and I'm running an indicator that I found that's free, but I know, Steve, you're working on some other stuff. I've got a 30-minute 62 EMA that Steve has taught, and I went ahead and I added the 5-minute 62 EMA and the 5-minute 13 EMA that we went over, I guess it was last week. Down here in the middle, this is kind of like the bread and butter. Right here, the multiple time frame hull, the band, the box is the 15-minute hull, and then this line running through it is the 5-minute hull. Okay, and then on Fast 33, obviously we can see, you know, the normal 15-minute wave and then the 5-minute wave that's moving through this. And then you'll see, in addition, on top of this, you'll see Bollinger Bands, and I'll get to all that in just a second. Okay.
Why only the 21 and 34 shadow bands?
Well, you kind of have to watch the 62 video that we went over, but yeah, I just use those as guidelines to help me help tell me where price is in relation to the 62 EMA, because the 62 EMA, which is this blue line here, is the same blue line over here. It is the center of the road, and price is going to always navigate and move around it. And so if I can have it on a 30-minute chart and I have the 30-minute shadow bands, it's telling me where price is overall. So what I'm doing initially is I'm going from the higher time frames and I'm zooming in. That's what I'm doing. So I always start over here on the left and I figure out where price is in relation to this 62, and then I'll draw traps, set my traps, scans, whatever. And these shadow bands right here help me. And I'll add, there's other shadow bands you can toggle on and off, but for the sake of my 30-minute chart, I don't want to run all of it at the same time because it can get too much.
Also notice in the top left of his chart where price is coming in, he's going through the 34 and then the 21, and we know when it does that sequence, when it goes through the 21, it has 87% chance of getting to the 62. Coming up from the bottom, as he just drew, coming out, from the 34 through the 21, there's an 87% chance of it hitting the 62. And so the 34-21 help you understand a little bit about the magnetic attraction of the 62 in terms of where price is.
So I think I covered the 5, and then the 1 minute, I've got tab 29 alerts, which is available if you're part of the Shredder program. And then that same EMA indicator, it just allows me, I didn't want a bunch of EMAs on my chart, so I just run the multi-EMA indicator, and it allows me to do that. I think you can find it, but it's free. And then this right here, this hole right here is the 5 minute hole. So this right here is the exact same thing as this line. Okay, I can see it on the 1 minute as well. So, and then we have tab 29, and then I actually run the 1, the 15, and the 30. I think with Fast 33, you can't see the 30, but you can see the 15 and the 1. And that's really my setup with regards to indicators. So let's go ahead and jump in and let's break this down, and I'll explain to you what a 5 minute retrace extreme trade is. Okay, so we're going to start from the left and work our way to the right. So I always start with the 240 wave, this green wave right here. This is your 4 hour wave. We can see it was there, the scan that's off screen over here. Excuse me. There's a 240 harmonic wave convergence. So overall, price is cycling down. You can see the 30 minute go to extreme, come up, go to extreme, and it's just cycling the 240 down. So what that's telling me is, overall pressure is going to be down. There's a little more factors that go into that, but overall, I'm looking for the 15 to go down and the 5 to cycle the 15 down, which will cycle the 30 down, which will cycle the 240 down. That's waveology in a nutshell. And so, in a very short nutshell. So we can see if we look at our 30-minute chart, price is coming down and the waves are cycling down. So then I'll go to my 5-minute chart and I'll say, okay, 15 went down to extreme. There's convergence right there, and it was making a lower high. Price is coming down. And as you can see, the 5 minute moving the 15-minute wave down, it's making a lower high, convergence, and it makes another lower, not exactly a lower high, but it's actually divergent right here, but I won't go too deep into that. But overall, you can see the 15-minute making a lower high there until it hits convergence right at this D. Okay, so here is a retrace extreme trade. So in the past, what we've had to wait on is if we understand the direction of where everything is going, we're saying, well, if everything's going down, then that means the impulsive side is down and not really up, as you can see on the 30-minute level. This is the retracive side. This is the impulsive side. We want to be here because that gives us a more opportunity to make more pips, right? It's not that we're being greedy. We just want to make sure that when we enter the trade, we're on the impulsive side so it goes our way with a higher probability. So in the past, what we've had to do is wait, and sometimes you'll get them, but you'd have to wait for this wave right here to come up and go into the static 89 zone. So if that ever came up into there and I got red bars, that's a retrace extreme trade, and I could have sold. But a lot of times, as you'll see, as it cycles down, there's so much downward pressure that the wave can't even get up into this zone until it actually reverses, and then it cycles back up. So the Bollinger Bands serve right here, these green lines, they serve as rolling extremes. These right here, these are the same. This right here and this right here are the same. So what happens is when price comes up and it touches that Bollinger Band, that is the equivalent of it going to this zone right here, and this is what we call a retrace extreme. It's retracing to the extreme, right? And then it's going down in an impulsive manner. So I took that and I said, okay, I see hits all over the charts, right? Now is there a pattern that shows up on the 1 minute chart? Because we use the 1 minute chart for entry. We use the 1 minute chart to execute the trade. And so I went and I looked across several different tons and tons of pairs. And like I mentioned earlier, about 65% of the time, you're going to get something that looks like this. Your 1 minute all of a sudden becomes divergent with price. It's kind of hard to see, but this is going up and this is angling down. And then you get a red bar flip right here on tab 29. And then price goes.
Clay, you maybe you're coming to it, but you didn't explain the Bollinger Bands.
I didn't explain.
Yeah, Bollinger Bands in the indicator field.
Oh, you mean, okay, yeah. So I don't know. What do you want me to explain? That's what I'm
Well,
asking.
some people have never seen it. They're only familiar with Bollinger Bands and price field. And
yeah. Okay, I got you. So instead of doing it up here, Fast 33 and Tab 29, they're measuring wave strength. They're measuring, tops and bottoms of price. And so if I could get something that's going to tell me, it's going to tag this and tell me it's time to go down, I'm not too worried about this right here. So instead of running Bollinger Bands up here and then price, if you trade in the old paradigm like I did, what I used to do is I'd have Bollinger Bands and price would cut through it like that. And that is like a massive zone that I have to place my stop loss like way back here because I don't know when it's going to actually reverse. But when when the waves come up and tag the Bollinger Band, you can see there's usually a sharp reversal point. And so I can pinpoint that entry right there with the 1 minute chart. But the moment that occurs, I'm looking at my 1 minute chart saying, okay, now it is at a retrace extreme. Now I'm waiting for the 1 minute to give me confirmation to tell me that it's time to turn around.
Clay, so questions. The Bollinger Bands will be within Fast 33. What is the setting for the Bollinger Band?
So Fast 33 is by itself. It's the thing that Steve made for us. Okay, Bollinger Bands are freely available on TradingView. Okay, so they're literally just called Bollinger Bands. You can search them. Don't do it right now. Don't do it right now. Steve, you want me to give the settings away at the end? Or do you want me to do it now?
Yeah, wait till the end. That way they have to stick around.
So that's essentially what it is. So this is a rolling extreme. This is what I'm looking for. I'm not trying to take every single hit on these things. I'm wanting to know what's going on over here. That way I understand my place in the waveology, and then I'm using this to wait. I'm waiting patiently. You'll notice you have hits here, and you don't have a hit here, and you don't have a hit here. And yeah, they're great moves. They're great moves.
Do you always wait for the Fast 33? Do you always wait for the 5 minute Fast 33 before you look to enter on the 1 minute?
Yes. I always go from here to here, and the 1 minute is last. This right here is the last place I come to. This is my last thing that I look at, the 1 minute chart. It is my last stop to say, okay, good here. Now give me the final green confirmation.
No. He's not waiting for a 5 minute bar flip.
No, I don't wait for this. There's too much slush. I want to get in at the moment that it's turning around.
Notice he doesn't have 5 minute trend bars on his chart. Well, he does, but he's not waiting.
Yeah, but I don't use this to get in. I use this to get in. This is pinpoint accurate, the 1 minute chart. I'd rather, instead of getting in, so if I waited for the bar flip, I'd have to wait till right here, which would be right in here, and I'd erode these pips right here. I don't want to do that. I want to get in at the moment of execution, that the moment it's turning around, which is right in here, and it kind of fizzles around, and then it goes, instead of getting in down here when the bars finally flip on the 5 minute. I don't want to wait for that. I want to execute on the 1, and then what I'll get to in a minute is, once I execute on the 1, I actually move to the 5 and I manage the trade on the 5, because as you can see, the 1's really kind of jagged and it can mess with your head, at least for me. But I like to manage my 5 minute trades on my 5 minute chart. So I hope that makes sense.
if we don't have tab 23, will the 1 minute fast color bar trend be the equivalent?
Yes.
Yes. So for the tab 29 people, they're asking, why do you have fast 33 on the 5 minute chart?
Because if you have tab 29, I'm sorry, Steve, but
No, I'm
if
asking the question for him.
if you have tab 29 in its current form on the 5 minute level, you're going to get a 10-minute wave in here and you're going to get a 30-minute wave in here. And when you add these Bollinger Bands going on, it looks like that. So I went with I kept it simple, and I was like, if I'm just looking for the 5, give me the indicator, which in fast 33, that just gives me the 5, and I can use it to look at the 15 without having the 15 over here, which frees up this chart for me to have a 30-minute chart over here. I hope that makes sense.
Yes, it's Clay's KISS theory.
Yeah, keep it simple. So, okay, so back to the 1 minute stuff. So what you'll see here is two different types of entries. You have a divergent entry here, and this one actually is not divergent either, but you can see that they both went. Okay. So you compare this with, and I'll get to it also as well. Steve, this is going to be a long session. Just buckle up, buddy. You can use scans as well. With the harmonics pattern scanner, you can't do this with the IML scanner, unfortunately. But as you can see, this red line right here, this is when I drew my scan and set my XA fork, this blue fork that you see running through the chart. I set it at 1700 on the 7th, so I guess it was yesterday at close. And then what will happen is the scans aren't guaranteed to go from C to D, but if it is going to go from C to D, it's going to be an impulsive move. So if I can draw this and set my trap on my chart, right, and if price decides to go from C to D, you can see it's an impulsive side move, right? It's coming down, had a retrace, coming down, had a retrace, went all the way to the D, and then reversed out. So if I can go from C to D, I know in my mind, okay, this is going to be an impulsive move, which means I'm going to have retraces on that impulsive move, and that's where I want to be. So that is why you'll see some scans on here. Sometimes you won't, but I'll use that scanner's capability of painting at the C to lay traps. As you can see on the 1 minute chart, I mean, they're not to the pip, but that was at the 50% fork Fibbo there. So, and I can't put INS on here because INS is repainted and all that, but you got a question, Steve?
Yeah, I'm going to ask two of them. So what tells you when to exit? And two, does he trade those as POTs on the 5 minute wave?
When to exit is money management that I'll get to. I have my own money management depending on my lifestyle. So I know this is going to be a really corny, cheesy, vague answer, but you have to realize these moves right here are part of the 15 and 30-minute move. We can see the 30-minute wave moving down like this into the 240 convergence. You can see that right there, right? We're picking off pieces of this move right here. So you have to realize that these moves aren't going to be POT, because if you POT this red right here, right, it comes up and all of a sudden it kind of fizzles around and all of a sudden you get green bars right here. You're out of the trade right here and you miss this. So it just depends on what you're trading. You have to understand what you're trading before you jump on the charts, because if you try to POT, you're going to get out faster. It'll be a burst trade. It'll be really fast. These are a little bit longer, as you can tell, 2140, 2310. Sometimes these trades last for an hour to 2 hours, depending on what it is, depending on how aggressive it is or whatever. But you have to understand that, these are larger moves and we're just catching the ride in here on the way of these bigger waves moving down.
Hey, define laying a trap.
So laying a trap is this. It looks like spaghetti over here, but laying a trap is setting forks. It's saying, okay, I'm going to set a pitchfork here. If I get a bounce on this pitchfork, that's a good indication for me to get in the trade. I'll run INS on here. I have some live examples. So I'll show you the whole progression of this real time, just so you can see, get an idea. But The shadow bands are also traps. The 62 EMA by itself is a trap. Pitchforks are a trap. Trend lines are a trap. Fibonacci is a trap. So basically, you're wanting to create places on the chart. That way, when the waves do retrace, you've got something in that zone that's going to tell you, okay, you have confirmation down here, down here, down here. You know where you are. It's hitting this. Basically, get in the trade.
So the concept at the big picture level is you can chase trades or you can trap trades. So when you trap trades, it's, you know, contextual to what we do in the new paradigm. It's you have places of potential support and resistance that when price hits it, and you have a wave condition, which is part of your criteria, either a convergence or in this case a retrace extreme. If that retrace extreme occurs at the condition, at the trap, then you have a trade. You've trapped a trade.
All right. Okay. So I'm going to go to the next slide. Okay. So this is USD CAD. We have our same 30-minute layout, 30 minutes pushing up, and here on the other side, you'll be able to see buys. We're coming out of convergence here.
Yeah, so you can put an alert on anything. So if Clay is using pitchforks, he can put an alert on any line on the pitchfork. He can use trend lines. You could put an alert on any line on a trend line. If price comes to this, if you want to put it 5 pips in front of it, draw a trend line 5 pips in front of your trend line and put an alert on it. Fibonacci levels, you can put alerts on any Fibonacci level. So whatever you would be using to, now the thing is, you know, and this is just a growth exercise going through a volume of trades, you don't want to have 57 different traps on your chart because you'll just get lost. You'll paralysis to analysis. Yeah. So find stuff that you see that you like, okay, just like Clay was talking about money management as a personal decision to make it fit his lifestyle and his PIP goals. So, you know, what of the variety of things that we have, shadow bands, pitchforks, trend lines, Fibonacci levels, INS, etc. You choose what you see happening the most that you feel comfortable with. So, you know, by law, we're precluded from telling you what to do. We can't say, use the shadow band every time, and when it does this and does it, see, that's giving you a trade entry, and the CFTC doesn't allow us to do that. So we can generalize what we do, and you have to choose, you know, what support and resistance system works for you. So Clay did outline at the beginning, you do kind of have to understand what support and resistance is.
All right. So we'll jump back over here. So this is the 30-minute chart, the 5, and then the 1. Okay. So these are reloaded waves, but there is a 240, which is a 4-hour harmonic wave convergence right here. So now from a harmonic wave convergence, what we assume at harmonic wave convergence is that impulsivity is flipped. And we were taught that in Fast 33 and Tab 29. So since we assume impulsivity has flipped, as we can obviously see on these 30-minute, we now have an impulsive side, a retrace side, and an impulsive side. So since we're coming from this, I'm trying to get on the buy side of the move, assuming the overall, you can see coming from this, the 30-minute goes all the way to extreme and hooks back, and it's cycling this wave out. It's cycling the 240 wave to the other side of the channel. So we zoom in from over here and we go to the 5 and say, okay, how can I jump in on this 30-minute move? And lo and behold, we have an extreme here and we have an extreme here. Okay, so what we've got going on is the 5 is cycling the 15 up and the 15's on its way up. The 15, which I wish you could zoom in, but the 15 is over here doing this to the 30, and the 30 is moving its way up like this, and the 30 is moving the 240 up. That's waveology. And so I'm not trying to catch this whole move. I want to catch a piece of this impulsive move. And so let me get my white again. So we have 2 hits, the Bollinger Band here. So these are, you can see the time of day. Market's moving, USD CAD. So when New York opens, this is a pair that I'm sitting on. This is a personal choice. You don't have to use this, but I live right in the middle of America, and so most of my pairs are US dollar based because that's when they move the most. And so get a hit here, impulsivity is up. Okay, and so we go look at the 1. We don't have divergence. We don't have the divergence here. That's not divergence. It's not there. That's okay. 1 minute still goes to extreme. We get all green bars in the trade, and it takes off. All right, we actually get a second chance at this. We can see the waves actually go up into a snake. So you have a 30-minute snake up here, and you have a 15-minute snake up here. So both those waves are coming out. And then you have a hook back right here. Divergence, real strong divergence there. And then it bursts out of there for another, these are 10 pip channels. So 10, 20 pips, 10, 10, 20, 30, depending on what your money management is. There's plenty of pips in just that move right there by itself. So these are patterns that happen every day. You just got to be looking for them. And we actually get another one right here. I think it's the next. Yeah, it's the next one. So this has just moved down a little bit. This is on the retrace side, retracive side, but it was too easy to not pass up. So we have a 30-minute convergence right here. It's starting to come down a little bit, do a little 30-minute retrace, and then hooks back. It tags, breaks through the Bollinger Band, and then bursts down for some more. You can see the move there. And so you have divergence, red bars, enter the trade, and then initiate your money management. We got any questions, Steve? Hello, maybe not. Okay, so we'll just keep moving.
Hold on, Clay. I'm there.
Okay.
Two questions that are exactly the same.
Okay.
And to be honest, you've covered this, but I'll ask the question so you could answer it again. What does Clay do when the 5-minute in the fast touches the Bollinger Band and then slides together with it?
If it slides, let me see if I can go back.
Well,
normally if it's sliding, I'm not wanting to take that trade.
Right. So he's not taking the tag of the Bollinger. You're still looking for the 5-minute wave to bend and then confirmation on the 1 minute.
Mm-hmm. For example, like right here, if it's coming from this, we know impulsivity's up. So it's coming in, it's hitting this Bollinger Band. It's been hitting this Bollinger Band for 5, 10, 15 minutes. So I'm thinking, okay, so it's not like I'm rushing to get on this thing. Actually, let me back it up one more slide. There we go. It's not like I'm rushing to jump on this train, right? It's already hit it. And all I'm waiting for is the 1 to make its way down and show me what's going on. It wasn't hitting it right here, which I think is this little hook right there. But when it hits it, I'm thinking, okay, now I see the 1 come all the way down. Now I want to see a pattern. I want to see that pattern. And what does it do? It comes down and it goes divergent. And that's what I'm looking for. It's not like I'm trying every time this is hitting here. If the 1 minute's wave's kind of just floating around over here and it's not at extreme, I'm not in the trade. That's not I want the stars to align before I press and risk my hard-earned capital to get in a trade.
So another question. So if these types of trades, you really don't need a hard bottom or top. He's not trading convergences. It is a hard bottom or top. It's the end of the retrace.
Right. This is the other side of the coin. You've got your harmonic wave convergence right here. But we all know that sometimes harmonic wave convergences can slide. So you get a retrace extreme trade. And this is actually the true harmonic wave convergence right here. It's just divergent on the waves. I know it's a little overhead for some people, but I'm not trading the point of where they intersect. I'm trading usually into a snaking harmonic wave convergence or a really impulsive side move.
This is a buy into the sell or sell into the buy in terms of
Right.
1029 talk.
So, if you look over here on the 1 minute chart, you get a 30-minute convergence right here at the top. So most harmonic wave convergence traders, they're taking this sell. They get the red bar flip, all the waves are meeting, nothing wrong with that, but sometimes you can see it slides against you. And then it'll go to a higher high, and then you get another harmonic wave convergence there at the top. I wanted to do, there's nothing wrong with a harmonic wave convergence. I wanted to do the opposite of that because sometimes it can slide on me. I wanted to say, hey, if it's going to slide on me, how about I trade back into it and exploit it that way? If it's going to be impulsive, why not get on the impulsive side?
Clay's answered this one too. How do you decide which currency pair you look for this on? So remember at the very beginning, he said he likes scans because the C to D move is impulsive. So you don't have to know Elliott wave. You don't have to know a whole lot of waveology. All you know is that on a 5-minute scan or a 15-minute scan or a 30-minute scan, the C to D run is impulsive. So he could take advantage of the scanner.
Right. Okay, I'm going to jump to the next. Okay, so we covered those two. All right, so here's AUD USD. So we have a 240 harmonic wave convergence up here at the top, so we're assuming it's down, so we're going to start making our way down. Also, Steve, these harmonic target hits, these are today's harmonic target hits, and it's just these are from 4 or 5 days ago. So the harmonic target stuff we went over a couple weeks, I guess last week, was just, it still holds true, it still blows me away. So we have the 240 harmonic wave convergence. We can see the 30-minute cycling it down. Okay. And then sure enough, as it's on its way down, we're waiting on it. The 15-minute comes up, makes a lower high right there, comes down again, and you have another lower high. These are reloaded waves, so it's not super pristine looking, but you get a 5-minute retrace extreme trade right there, and then you ride that down to whatever your money management is going to be. So again, divergence, it's hard to tell there because peak one's like maxed out into the ceiling, but you get divergence there as well. And then this is what's so cool about this, guys. Tab 29 and fast will be right most of the time. Look at this. This is all the way in extreme. It's been sitting there for forever, for 10 minutes, and then all of a sudden you get a bar flip, and look what happens. It's time to go. It's time to go. So you have to trust this. This will get you right most of the time. So trust the indicator. Don't try to say, oh, it's at extreme, I need to jump in, and you're in right here, and then your stop gets blown. Don't do that. Trust this. Notice this. It takes all this time, and all of a sudden everything agrees, and it's time to go.
Yep. And when it agrees, it goes.
Yep. So just keep that in mind. These are also 2-bit channels, so just for the record.
The C to D move, Victor, is on his upper. I mean, you can use it on any chart, but for the examples he's given here, he's using a 30-minute chart on the left, so it would be the C to D move on the 30-minute chart. Or if that's at the 15-minute level, you can have a C to D move on the 15-minute level. So the C to D move is going to be impulsive no matter what. And you're looking for you want a decent size run, so you can have a pullback or two. That'll give you a choice of a couple of entries. Yep, no problem.
Cool.
We'll talk about the haul at the end too. We got a couple questions on that.
Cool. All right, so this is a really cool one. This was, I think, last week. Yeah, so this is Euro USD. Same layout over here. Prices moving down. All right, so 30 minutes. You can see 30-minute cycling down. Okay, so as it cycles down, we actually have a retrace extreme that actually tags the Bollinger Band and the 89.11, which is, there's nothing wrong with that at all. Let me see here. I think those are yeah. And so you can actually see, I didn't mark it up, but this is going down and this is drastically going up. So there's divergence there. I just didn't mark it. So we get a retrace extreme here. The 15 minutes coming down, comes down, makes a higher or a lower high right there, and then it's moving on its way down. And we actually get another one. 15-minute barely even comes up. The 5-minute reaches out, and then we get another one right here. There's no divergence there. Like I said, it's going to be there. Sometimes it won't be. But all of a sudden you get a red bar flip, and it's time to go. And, 5, 10. I mean, how many pips do you need a day? Come on. So you get this move depending on your money management, and you get this move depending on your money management. Like, come on. It's there every day, and you can look at the time. If you trade London session, 3:30, 5:25. I personally don't, but that's there. So the next one is pretty cool. So we were getting these constant moves down, and you actually don't get a Bollinger Band hit right here. But I wanted to take advantage of this move up. It's still a retrace. It just didn't line up with my criteria, right? So I drew a trend line right there on that, and you can see 1, 2. So the third trend line's good. Look at this. You get a Bollinger Band hit. So you're looking for your normal stuff, and then all of a sudden you get a trend line hit, and it's bye-bye. So use the tools that you've already got. Don't forsake pitchforks and trend lines and Fibonacci retracements and all that. Use that stuff because that's to the pit, guys. That's literally to the pit, and it took off and it lined up with everything else. So this works with stuff that we already got.
So the question about divergence, wicks are candle bodies. When you're drawing and trading live, it is the candle body. The wick is the candle body. When price comes up and hits that third hit on the trend line there, that's a bodied candle. You're waiting for 2 pips of pullback or whatever, but it only looks like wicks, in history. Now, in terms of divergence, yeah, we prefer bodies and not wicks to answer that question. The 240 wave, don't get all confused by that. So, Clay is just looking at he's taking the progression as he's taught. Look at the 4-hour wave, look at the 30-minute wave, look at the 15-minute wave or 10, look at the 5, look at the 1. You can trade, if all you have is fast, you could trade 15-minute cycles. So you want to be coming away from a 15-minute convergence and, looking for a retrace out of the 15-minute convergence. So you might go 5, 15, 1, whereas he's got 35, 1. So you work with the tools you have. The concept is exactly the same. It's 100% scalable on any time period. Good question, but it's just what he's doing because of the tools he has.
Cool.
Are you waiting for the 1-minute candle close for your trend bar flips?
Yes.
Mm-hmm.
Because sometimes if it's up here in extreme, it'll all be one color, and then all of a sudden it'll just move against you real fast, maybe like with 10 seconds left on the candle. And if you had entered in early and gotten some FOMO and tried to enter early, like you'll get burned on that. So I always wait for candle close. I'd rather miss a move and not get burned because I followed criteria and waited for a candle close than trying to jump in a move too early and all of a sudden I'm having to back my, if I was entering here and then, all of a sudden price starts coming up against me, I'm having to either back my stop up, which is completely destroying my head game, or I get stopped out and I get a -3 because I didn't follow my own rules.
Right. When he says miss a move, what he's talking about is he's waiting for the candle to close in order to guarantee, in this case, all the bars are red. Okay. So he wants all, in terms of tab 29, he wants all 6 bars. In terms of fast, if you just have fast on the 1 minute, you've got to wait for the solid red block, but it has to stay there on a candle close. When he says miss a move, that is, let's say he sees reasonable 10 to 15 pip targets and he's already 7, 8 pips into the move, before a candle closes that gives you all red bars. So he's not going to take that trade because it's too late. So he was waiting for the bars to flip, but it took too long to flip, so he didn't take the trade. And he's saying he'd rather give up those missed trades than try and take it on a live trend bar and only to have it reverse on him and stop him out.
And then you're banging your head on your keyboard because you knew it was the right thing to do and you didn't do it.
Yeah, there you go.
So there's actually a little move over here. It's kind of in the corner. There's divergence here, and this is like some hyper divergence going on, but I felt comfortable including that because you can see the 30-minute snake going on down here, and we knew where the pressure was going, and it was bouncing off this 1 minute 62 EMA. But yeah, P1 barely got even to the power zone on that. So, but still valid. It's this trade right here, and it went down. This is Euro USD again. Now there's a little bit too many wicks on this for personal trading, but again, the pattern still shows itself. Retrace extreme trade there. One goes to the extreme, get red bar flip, and then like I said, it takes off. But you have your 15-minute cycling down compared to this one. This is coming down, but there's just too many wicks. But guys, if you see this kind of stuff, just avoid it. There's no point in that. I mean, even if the pattern's there, I just wanted to include it so you guys could see that it is there. If you see this, don't even mess with it. It's just not worth it. These big long wicks coming out of candles like this. I don't know if this wasn't even NFP. So just don't do that, because what'll happen is you'll get in a trade and all of a sudden it'll just jack around like that, and then you're sitting and hoping and wishing land, and that's not trading. So if you see wicks like this, don't do that. You'll see the pattern on it, but don't trust. Like, guys, this is the confirmation stuff. This is after you've analyzed what's going on up here. And if this looks like garbage, then don't even look at it. This doesn't matter.
It just confirms it's garbage.
Yeah, I mean, even the waves are pretty gross, but you can see there it's hitting the Bollinger Band and then it reverses down. So just throwing that in there.
No, all of these are based on confirmation. I don't understand where that's coming from. These are all based on confirmation. Tab 29 is the confirmation. Fast 33 is the confirmation of what he's looking for.
Right. Okay, so again with the scan, I think this was this morning, real early. Yeah, it was. So you have your scan paint right here on the D if you have the harmonic pattern scanner from, if you have that one, you can paint it the D. Like I said before, the C to D move is going to be impulsive. So there you go. So as price starts to cycle up from this 240 harmonic wave convergence down here, price is moving up, 30's moving up. So where am I trying to go? I'm trying to go with these over here. So now I'm looking for buys, and you get one right here, but it wasn't real clean. But you get a perfect one right here. And then you can enter the trade depending on your money management. You get divergence, you get green bar flip, I think, either on this one or this one. And then depending on what your money management is, you can ride it all the way up to the D, you can ride it up to here, whatever you want. But again, pattern shows itself, impulsivity's up. We go all the way to the D, and we actually go beyond the D, which happens a bit too. So, but again, divergence to get in. Green bar flip on the one. Once you're in the trade, there's a little box at the bottom of TradingView. I actually click that button and I will maximize my 5-minute chart window. I won't look at this. I won't look at this because it doesn't matter. Because once I'm in the trade, I'm managing it on the 5-minute chart.
So just some confusion in terminology here. So this is why it's important to call everything correctly. Trend lines, INS lines, are not confirmation lines. Those are the traps. Confirmation is in tab 29, fast 33. And he mentioned very first thing today, you've got to lay your traps. He's spending more time showing the retrace extreme in terms of Bollinger than he's focusing on traps. But you do see things like shadow bands on his line. You do see moving averages on his charts. You see trend lines on his March. He's talked about INS, etc. So those are all the traps. Tab 33, tab 29, fast 33 are the confirm. They're the signal to take the trade.
All right. You also notice over here, Steve, just a little point. Pass and check on the 62. So you'll see that a lot as well. All right, so GBP USD, this is a pair I don't trade because of it's a little impulsive for me, but I know people that do. There is we see the 30-minute cycling the 240 down. You'll see the Bollinger Band stuff show up a lot on impulsive, like really impulsive moves. So let me, so this one right here and then this one right here, I didn't mark this one because the 15 was coming out, and at the time it didn't look like it was hooking back at all. Couldn't tell where the end of this move was, but I chose not to choose this one because this was divergent, but that's a little advanced. But anyways, so you have a retrace extreme here, and you have one right here. Again, divergence. No divergence here, but again, still is valid. And what you'll actually see on a lot of, if you were to watch me doing this live, I'd be drawing, trend lines. I'd be having Fibonacci retracements going on. I can toggle my INS, which would be over here on my 1 minute chart, to see if it was hitting a Camarilla line or a harmonic target or anything like that. So it's a little bit more active on my one than what's being displayed. I just wanted to keep it clean so you guys could see the divergence stuff. But again, divergence, hitting the Bollinger Band. We know the direction, red bar flip, you're in the trade. And these are...
So another big macro question here. And again, I think this has been covered, so let's just cover it one more time. The scans from C to D is an impulsive move. So inside that C to D move, we know there's going to be a retracement. There's going to be a pullback to continue the impulsive side of the move. So we're not interested in catching the trade at C. Okay. We wait for it to move out from C impulsively. At some point, it's going to pull back. So what I said earlier was use the tools you have. Clay might be using a 30-minute scan. You might be limited to 15-minute scans.
Well, this is a 15-minute scan right here. It's orange. So,
right. So you're going to have a C to D move, and you're going to be looking for the pullbacks in the C to D move. Those are the in this case, it's called a buy into the sell. So we're taking impulsive side moves in bits and pieces, just taking where all the momentum is with us. It's kind of old school, old paradigm to talk about the trend is your friend. But we're not getting in late into that trend. We're catching the trend as it flips from corrective to impulsive. And so, or corrective to motive, if you want to be correct in terms of Elliott wave. But we're catching the impulsive ride of the next wave up. So there's no specific time period that you have to use or that you're limited to use. It's whatever tools you have. But in terms of scans, 15-minute, 30-minute, 1 hour, you're looking for the C to D move, because that's impulsive. And then we're looking for retracements inside that. Okay. And then anything there that can help us validate that pullback for the retracement has ended.
Cool. And then, yeah, this is the same GBP USD move. Again, if you get in real impulsive side stuff, guys, we can see the 30-minute is just snaking down here. These just pop up all the time. I know a lot of people are like, oh, it's snaking. I love snakes because it's easy. I love snakes. People are like, oh, it's snaking. I took the conversions of the snake and it went, 2 pips and then I got stopped out. Guys, I'm on the other side of that saying, I love snakes because look at that. Boom, boom, boom. Pips in the bank. Thank you. So it's just easy at that point. So if you see a snake, I'm just sitting here. I'm not trying to catch this. I'm not trying to catch this. I'm trying to catch this. I'm trying to trade into that impulsivity. I'm not trying to fight this. It's going down. If you're trying to buy, why? It's coming down. So I'm just waiting on it to kind of just take a breather, and then it's going to keep going. Take a breather and keep going. Take a breather and keep going. And I'm catching it right when it's done stopping for gas, and it's going to go another 10, 20, 30 pips.
Okay, so again, some confusion. Please listen. Scans are an easy way to identify an impulsive move from C to D. As I said earlier, it doesn't have to be based on a scan. Any harmonic wave convergence, it's going to move out impulsively, and you're just looking for a retrace in that move as it takes off. Okay, down here in the middle chart here, if that's all you had, you can see the convergence of the 15-minute wave at the bottom. It goes up and retraces, convergence. It goes up and retraces. The 5-minute wave is retracing against it. So those 5-minute moves back into the 15, these are sells into the buy in this case. So it doesn't have to be off a scan. That's just an easy way to identify them. Since we have the scanner, also gets you in the habit of drawing X-ray alpha Charlie Delta forks, which is a good thing to do. So it's a tool that helps, identify things for you versus you having to go find them. It doesn't mean you can only do it with a CD move on a scan. Anytime there's a harmonic wave convergence of an upper level wave, you're going to have retraces inside that move.
Yep. And on all 3 of these right here, you can see divergence on every one of them. So
yes, divergence doesn't remove the need for the 1-minute trend bar close. it just it stacks the probability even more that says we are in a ripe time for a reversal of the move at the time.
Right.
We'll talk about money management at the end. I know. I'm just.
All right. So, yeah, you're good. Okay. So I'll show you some stuff from today.
Buying into the sell means the move that we normally trade is a convergent move, which is harmonic wave convergence. It's normally all the waves coming to an end. That's the classic move. So if that happens to be occurring at the top of the page, at the top of the indicator, we're looking for a sell move. So a buy into the sell means we are retracing back against that, and this is, in old terminology, this is called a pullback or a swing trade. A slingshot, excuse me. A pullback or a slingshot trade. We just happen to have the technology with harmonic wave convergence and the use of these unique Bollinger Bands to tell us exactly when that slingshot is ended. If you pull a slingshot, right, you're watching somebody pull a slingshot, at what point do they stop and let go of the slingshot rubber band? Normally, you'd have to go, I think he's going to let go here. I think he's going to let go here. No, I think he's going to let go here. Here we know. Let's say he's pulling it back and there's a brick wall. He can't pull his hand back any farther. We know that that's the extent of the pullback. So that's what the 5-minute wave hitting the Bollinger or the 5-minute wave hitting the extreme is. It's a brick wall. This retracement can't pull back any farther. With 90% of surety. So you know when the pullback is ending. And you're buying into the sell. So we're slingshotting up into the convergence, for which then one can do the sell if you're so inclined. Or you can just trade buy into the sell, sells into buys, and make lots of money like Clay does.
I think I wanted to, okay, so this is the AU scan I pointed out earlier, but I also wanted to point out, remember that 62 hit over there? So it's this line right here. Okay, it's this one right here. The wick actually wicked into the Bollinger Band and then retraced, but it was right off the 30-minute 62 EMA, and then you can just see the impulsive side of that just take off. So let's see here. I think I've gone full screen. Okay, cool. Okay, so here's today. So when I woke up this morning, I was pretty excited because you never know what's going to happen on Monday. But we look over here on the 30-minute side, okay, so we know we have a 240 harmonic wave convergence here. All right, so price is starting to cycle to the other side. And you can just look in the fast indicator at all the opportunities. But we'll just expand. So what it'll look like is this. Oh, wait, that's the 30-minute level. So we get our 240 convergence down here, or down here, and you can see price is starting to come up, okay? 1, 2, 3, 4, 5, 6. I think that wick down 7, and then it starts to retrace out and then fizzle out, and you don't want to mess with that. But you can see when the move was real impulsive, how many opportunities you had just to get just to get a move. 1, 2, 3, 4. Look, these are 5-pip channels. How many pips a day do you need? You just need one of these chunks and you're done. So the opportunities are there. If it's coming out like this and it's not hitting the Bollinger Band, I'm sitting there. I want this. I want this. I want this. I want certain criteria to tell me what's going on before I get in the trade. So it happened this morning across, I guess it was
Hey,
across.
Clay, go back to that chart full screen again. All right, so explain to everybody once again what the colors are of your moving averages.
Okay, yeah, sorry. So this blue line right here is your 30-minute 62 EMA. Okay.
Any number of ways you can put that on there. We'll talk more about that at the end.
Right. This purple line right here is your 5-minute 62 EMA. And then this white line right here is your 5-minute 13 EMA.
All right, so he has a 5-minute 62 and a 5-minute 13. the 13 is faster moving because it's only based on 13 candles. So if price makes a pretty exaggerated move and you're only measuring 13 candles to plot the price, it's going to move faster than if you're looking at an area where price was flat and then it took off and you're measuring 62 candles, or in this case 5 versus 13. So the 5 is going to be faster than the 13. So when you understand that, now this is really Forex 101. You should have been taught this in Forex 101. When you see the same class of EMA, in this case EMA, and you see the shorter bar wave moving farther away from another bar that's slightly higher, i.e. the 5 minute is separating from the 5 minute 13 is separating from the 62 EMA. When you see that, that's telling you that it's moving faster, and as that gap opens, notice what's happening there as that gap opens. Price is pulling back and the gap is still opening. This is a very safe way to understand what's going on with price action. Let me say that again. If the shorter term wave is opening up, if its gap between it and the next cycle wave is bar count wave is expanding, that means you have momentum in that direction, in this case up. And what you see here on these retracements is while it's retracing, once he gets up in there, that 5 minute 13 EMA is still rising during the pullbacks. You're not seeing it pull back down. You're not seeing big chunky moves down. For the most part, it's still rising up with these pullbacks. Now it starts leveling off and coming back, and that's when Clay says you don't want to mess with this. Okay, because you're getting indications that the momentum has gone out of the wave, because now that 5 minute, the 13 is now starting to close into the 62. That gap is lessening. So you're in a danger zone. It's not time to be, trying to pick off pips there in a buy, in a long, in an aggressive move. So as long as I keep saying 5, as long as that 13 EMA is separating from the 62 at the 5 minute level, white separating from the purple, as long as it's growing in the gap, it's good trading. You want to take advantage of that. So all those numerous buys into the sells, those retrace extremes that Clay was circling down there, those are all great moves. Now, in terms of some money management here, once you see the second or third touch there, like he has a nice touch right at the bouncing right off the 62. Okay, it's like, it's like a pack move. Price goes up, comes back, checks the 62. You notice right there, it doesn't break the 5 minute, and then it goes up again, okay, and it's not closing below the 5 minute again. So we can essentially, somebody asked about trailing stops. We don't use trailing stops. Okay, that again, there's, trailing stop says, for the most part, I don't know where this is going, so I'm just going to live this big amount and go to bed and see where it takes me. And that's just not what we do. We have other things that we could count on more than that. So you can actually use an offset. You can use you could just draw a line, 3-4 pips away. We have an indicator coming out that'll do that automatically. So you could pick any one of these moving averages and say, give me that same moving average minus 3 pips, or give me that same moving average minus 4 pips. Not candles, but pips, and it'll draw the identical, like a shadow band. It'll just draw a line right underneath it. So you can manually draw that line here, and once you've had 1 or 2 bounces, like where he has his 5 minute 13 EMA sign, and you see that wick come down and bounce off right there, now you've got the fact that EMA is acting as a support. And so I could put my stop loss 3-4 pips, depending on my scale, 3 or 4 pips on the other side of that. And now, every one of these moves, I just stay in. I don't need to exit these moves. I can stack them. So every one of these trades, the next one up, I'm in, but the old one is still going. The next one I'm in, but the previous 2 are still going. The next one I'm in, but the 3 previous are still going. It's called stacking trades. Okay. So you just, once you get on the charts and you see this, you'll understand these simple little moves you know, you have 3, 4 trades close out at the top, and the first one gets 20 pips, and the next one gets 15, and the next one gets 10, and the last one gets 5. You've done some pretty badass trading.
Yeah. So CJ, let's look at EU. Okay, we'll do that.
No. So there's a question here.
Cool.
There's a difference between risk and margin. Okay. Notice in these moves where I said, Clay, can you just pretend to draw? Well, draw, but pretend. It's a 3 pip. What are these? I can't even see. Are these 5 pips or 10 pips? These are 5 pips?
Yeah.
You draw a line about 3.5, 4 pips behind your white line. Make it red. Oh, not a horizontal, a freeform line.
Oh.
Just mimic your moving average. You can use ink to go. That's fine.
Yeah, I'm gonna grab that.
Yeah, so don't worry about it not being perfect. Okay. So now what I want you to see here is go ahead and draw a horizontal line where the wick hits that white line first. Yeah, draw a little horizontal line there. Okay, so that essentially is once he enters that wick trade, okay, if he entered that wick trade, that's his stop loss at that time of entry where the red moving average is. Okay, that would be his stop. Now, as price moves up to the next pullback, draw a horizontal line there. No, yeah, right there. Yeah, draw a horizontal line there. Okay, so as he's moved from the first red line to the second red line, is he in profit on that first trade or not? Yes or no? Yes. So his 2% is not at risk anymore. Now, if you're a U.S. trader, you do have limitations at 1 to 50 how many 2% trades you can do. But if you're trading with an international broker and you have something more than 50 to 1, you know, if you're 100 to 1 at least, you could probably get 4 trades in, real close to it. Okay, if you're 500 to 1, you don't worry about it. So the fact is, as the trade moves up, the new stop loss for the previous trade is in profit. So that 2% is no longer at risk. Okay, good question. Thank you, Clay.
No problem. We'll do UCAD today. Yeah, I caught a little bit of this. I know a couple of people that did, but you know, we'll just look again. Again, higher time frames. We're coming down. Let me grab my ink to go again. Higher time frames, we're starting to move down, and then we get a real impulsive move down. The 240 is coming down. The 30 is cycling the 240 down. So let's jump back over to our 5-minute chart. So we know it's coming down, and all we're doing is we're waiting. We're just kind of sitting there twiddling our thumbs, waiting on it to come down. You can see it kind of just hovers around, and then it starts to move down. You get a lower high right here. I couldn't tell if I went into the static extreme, but still, lower high right there. Comes down, hooks out. Comes down, hooks again. And then it kind of fizzles out, and then it reverses. And now it's just been sitting in la-la land. But, you know, it's not like we're having, you know, it's not like I'm buying right here. I'm not buying these harmonic wave convergences because it's like, this could either slide on me. Now it could reverse on me. It could very well do that, and that's perfectly fine. You have to have that mentality of like, if I'm sitting here and I think it's coming down and all of a sudden I get a convergence and price starts to do this, you know, I'm okay. I lose nothing. But if the market wants to show me this on its way down, then it's easy. And again, as Steve was talking about earlier, these EMAs got real wide. So I had real big confidence right there taking those two. And depending on your money management, it just depends on how long you're in those trades. But, you know, when the market's real impulsive, I know that whenever I first started doing harmonic wave convergence, impulsive markets were scary to me because I'm trying to take these harmonic wave convergences. I'm trying to take this. And then when I finally learned how to do the other side, now it's like, that's easy. That's easy work there. And then I think the last example I've got, Steve, was this. I don't know if I sent this to you. So the new scanner now comes out with, I don't know if you're if everybody's phones blew up this morning, but we now can get notifications for 5-minute scans. And so I drew this 5-minute scan, and I threw a CDX fork on it, and the reason it's purple is because the 5-minute is the purple wave, and so I try to keep everything color coordinated. So I have purple scan, purple fork, and price kind of just meandered along, and then right in here we've got I think right around in here we got the INS lines painted green, and this is a warning line of this CDX fork off a harmonic target 21. And let me see if.
Oh man, that's just random luck.
Oh, I saw. Hold on a second. Watch this. I actually deleted it. I need to put it back on there. And then at 261.8%. Let me just move this line so you can see. And then if you look at the indicator as confirmation, look what's going on. So just wanted to show like real life examples. It's easy to show screenshots, but to actually see them on the charts, it's kind of scary. It kind of freaks you out a little bit, but it's so much fun. So much fun. So set your traps. This is what I was meaning earlier by setting the traps. I got my scan from the scanner. I have my CDX fork that we all know how to draw. I have my INS lines, which Steve gives out for free, which is unbelievable to me. And then set some Fibonacci off this swing here, and then come on. And then all of a sudden this is confirming as well. Like, come on now. That's just fun. That's fun right there. So
okay, we've covered this 2 or 3 times. Let's answer it one more time. In waiting for the setup, is there an alert that can be set?
Yes, you can. I'll go over that. Yeah, I'll just go over that right now. Well, I'll do it when I want to do the settings. I'll do that.
Okay.
Let's do that.
All right.
So
how can we get the enable code for INS 2.0? Watch the session that we taught the INS 2.0.
Right.
Because it has some special considerations in it.
Yeah, I didn't go over that, but you go over that in that video. So, So Clay's money management. As always, money management is trader's choice. We cannot give you financial advice. We're not going to tell you how to trade. We don't know your lifestyle, and I don't think we can even legally tell you what to do. There's different, I wouldn't say models. There's different I don't even say that. I would just say there's different ways you could do it. And it's different depending on your lifestyle, depending on how long you can put on the charts, and what your goals are. Things to note: 5-minute retrace extreme trades are usually the beginning of 15 or 30-minute higher time frame moves. I didn't really show the 15-minute chart because I've kind of moved to the 30-minute level now, but you'll see the exact same thing on the 15-minute. It's just sometimes it'll be a little bit smaller moves depending on what you're looking at. It still holds true though. You're trying to jump in on a higher time frame move. That's what you're doing. These moves can be very impulsive, and they can go for quite a few pips depending on what happens. There's no guarantees, but as always, you just never know. But you execute at a high level, you wait for certain patterns, you wait for the stars to align, and you execute, and there's no emotion, like a robot. And once you're in a trade, once I get it on the trade, I just close it. I maximize that 5-minute chart. I get rid of that 1-minute chart. I would sit sometimes on the 1-minute chart and just stare at those 1-minute candles, and it would make me antsy, and I just can't do it. I can't deal with that. I got to deal with it on the 5. Right. So it's a 5-minute trade. So I'm going to deal with it on the 5-minute chart. Get the heck off the 1, and then you need to find a money management plan that works for you and your lifestyle. Additional thoughts: if peak 5 hits a Bollinger Band and there is no divergence or a immediate reversal, I think this was asked earlier, then I am questioning if I am on the right side of impulsivity. What that means is if you get a Bollinger Band hit and it doesn't just flip around on you, you might be on the corrective side instead of on the impulsive side, and you don't want to be there. If peak 5 hits a Bollinger Band and just kind of floats and price kind of floats, if I'm in the trade, I'm bailing out of the trade. If I'm not in the trade, I'm starting to get away from it. I don't want to be in position to where I get in and I'm only gets flush because I just read it wrong. So what that means is if you're on the wrong side, you're going to know pretty quickly you're on the wrong side. From what I've seen, there should be a peak 1 divergent move or just straight reversal not long after the peak 5 hits the Bollinger Bands. The static extremes, which you didn't really cover a whole lot, but if that 5 minute goes into that 1189, those red, yellow, or that red, blue box, and everything else is lining up, regardless if it's a Bollinger Band hit or not, that's still considered a retrace extreme. We just didn't really show a lot of examples of that. And then lastly, before I show the settings, be the MacGyver. Okay, so I'll just say this, and I don't know, but when I first started doing this in tab 29 and with Steve, I struggled. I'll be honest with you. I personally struggled. I am just like every one of you listening. I knew what I wanted, and I didn't know what it would take to get there, and what it took was for me to take control of my own life and say, you know what? If it's meant to be, it's up to me. And I got to sit down and I got to figure this out. And I'm going to do it until I could do it in my dreams. And so I researched, studied, learned. I watched hundreds and hundreds of hours. And I probably look at charts way too much. And I demoed. Don't be spoon-fed your entire Forex career. I think there's a lot of people out there that are like, hey, just give me the system. Give me the steps. Let me do it. I'll master it in 20 minutes. No, that's not how it works. You have to take control of your own life. And here's the thing. This is, you did nickname the clay way, but there's other stuff out there yet to be discovered. But here's the thing. You have to master one thing first. So take responsibility of what you're doing now, master it, and you have a responsibility to be successful to your family and your friends because you decided to do this. But most importantly, you have a responsibility to be successful for yourself because you are in control of your own life and you only get one. So persist without exception and get it the freak done. So master one thing first. That means is if you're doing forks, do forks until you could draw them in your sleep. Then be the MacGyver, research, study, learn, test, demo, and don't be spoon-fed and persist without exception. Now we can.
Yeah, so let me have a few things here. Good summary there. So again, this was said, so it's just a matter of RAS and how one listens. Without tab 29, could a person use 30-minute CD moves for higher potential impulsivity? So what do you know about a 30-minute harmonic wave convergence, which would be the C? What do you know? What does it take to be a 30-minute convergence? This is a waveology test. What does it take to be a 30-minute convergence? Let me ask it another way, because I'm not getting any answers here that give me confirmation. What makes it a 30-minute convergence? Yes, Todd, 30-minute and smaller time frames are all at an extreme. A 30-minute, you don't need a 240 wave to be a 30-minute convergence. That's a 240-minute convergence. What does it take to be a 30-minute convergence? You need the 30-minute and 15 or the 30-minute and 10 at an extreme. So you can't have a 30-minute convergence without it being a 15-minute convergence. I'll say that again. You can't have a 30-minute convergence without it being a 15-minute convergence. So if you have a 30-minute scan and you have a C that's painted, the C to D move may be a 30-minute move. It may be a 240 move, but all you need to know is that the C is a 15-minute convergence, which means as it moves out at some point inside that 15-minute wave, it's going to pull back and retrace at the 5-minute level. I'm talking scans. The C is a harmonic wave convergence. If you have a 30-minute scan, the C is a 30-minute harmonic wave convergence. And therefore, it has to be a 15-minute convergence. It has to be a 5-minute convergence. It has to be a 1-minute convergence. So you can use a 30-minute scan, understanding the C is just paying attention to it being multiple exhaustion points. No problem, Lydia.
Yeah, right there. There you go.
All right.
There's your C. Just
Yeah.
trying to find it.
Yeah. Look at that move out of there. Jeez.
Okay, so let's do the settings then.
Yeah.
Since we bribed him. All right. So if you stuck around this long, thanks. Appreciate it. I know I can ramble, but I feel like it was important. So here's what you're going to do. All right, everybody get your pencils out and write this down, because Steve's not going to answer this because this is going to be in the video. This is really easy to do, okay? This is really easy. You're going to go to Fast 33. Okay, you're going to hit this little arrow right here. You're going to hit Add Indicator on Fast 33. Okay, you're going to go to Apply Indicator, Built-in Bollinger Bands. It's probably going to be the first one up there. You're going to click on Bollinger Bands. Okay, it'll then load Bollinger Bands on your chart, but they're not going to pop up. So don't freak out. Hold on. Come over here to Settings. Okay, you're going to go to Style. I'm sorry, you're going to go to Source. You're going to go all the way to the bottom. You're going to hit Fast 33 Peak 5. This is Peak 5, this purple line. And then what I did was I went to the colors, and green, the green looked better to me. You can use white, it doesn't matter. But I use green, like a lighter shade of green, because I think it's easier to see. That's preference. I don't use the basis that's here. I have that toggled off. It's just more lines I don't need. So I toggle that off. I have the upper and lower. And then the inputs, okay, these are your settings. All right. You're going to have a length of 10. Your source is going to be Peak 5. And then your standard deviation is going to be 1.75. Now go and make pips.
Yeah.
But so 10, Peak 5. See if I can write better. Terrible mouse writing. And then standard deviation is 1.75.
No, that's not a new version of the Hall. Well, it depends on how long you've been paying attention to our Hall. So this particular version of the Hall is what, 6 months old, 9 months old? I don't know.
I can show how I did that.
Yeah, show how he does it, because they're confused by what you've got there.
Yeah, so I don't like. Okay, so here's what I did. All right, so you're gonna go to indicators. You're gonna go find MTFA hull with bands. Okay, you're gonna click on it. It's gonna pop up on your screen. It's gonna look like whatever you had, whatever the default is, which I think it's gonna blast my screen. Yeah, there it goes. I didn't care for that, but I also didn't like the, no offense, Steve, I didn't like the hull running through the middle of the candles, but I wanted to have it on my charts to where it was easily identifiable. So what I did was, again, pay attention, MTFA, hull with bands, okay, visual, went to move to, new pane below. And what that does is it puts it in a pane below, and I took it and I just shrunk it, made it real small. And then to get the line in there, all it is you're running 2 holes at once. So you'll hit the cog thing, and then you will add your 5-minute in there. And do that as well, or whatever holes you want to run. I used to run the 30-minute hole. I think that's what this is. Yeah, it's a 30-minute hole there, and then that's what that is. But I didn't like how it looked. You know, if I were to expand this out, it'd be that big. But I liked it smaller. I was able to read it easier.
So was it?
I can look at that.
Go ahead. I'm sorry.
What's up?
Was it? I do so mmany sessions, I get confused. So those that attend both Tab 29 and Disruptive TV, Disruptive Traders TV. Did I cover multiple time frame moving averages just in tab 29, or did I do it last week at some point in here as well? Do you remember, Clay? Does anybody remember?
I thought you'd done it before.
I did it in here? Okay, some people are saying I did it in here. Okay, so you want to watch last week's sessions. It'll explain how you can, without using any other indicators, how can he put a 5-minute 13 EMA on a 1-minute chart? Let me just ask that real quick. Test question. 13 EMA from a 5-minute chart on a 1-minute chart. Yeah, math. What's the math?
Do the math.
13 times 5 or 6? 5. There's 5 1-minute bars in one 5-minute bar. So if I have a 5-minute 13 and I want to see it on my 1-minute chart, it's 5 times 13, which is what? 65. 6 times 3 is 18. 68. Yeah, 68. Thank you, Vivian. 68.
Yeah.
So I can put a EMA 68 on my 1-minute chart, and that's the 5-minute 13 EMA. So you can go back and forth simply by multiplying and dividing by the bar differences. Now, Clay uses something else to help him, so if you want to explain what that is, Clay. We have a multi-time frame EMA coming out, but in the meantime, you can use this as well.
This one's free. So if you go to indicators, it'll be multi-EMA. It's by G-Hub. I just found it randomly. And you're able to put in 8 different EMAs, which is actually pretty useful. You can color code them or whatever, but I've got different EMAs in here that I use at a more advanced level, and but it's just really easy, and you can throw the 30-minute, just do the math on it. Like Steve said, he talked about that last week, but I've run them. You can run 8 EMAs with this EMA, and it actually gets a little confusing, so you actually don't really want them all, but I don't run it on here because the shadow bands project their own 62 EMA as well, as you can see. So there's no need. I have other EMAs, but it's not needed for what I'm showing today.
Less is more.
Yeah. I try to keep my charts real clean too. If I think my general rule of thumb is if I have more than, if I drew a fork here, a CDX fork, which is not going to really tag anything except for that passive check right there. But if I've got like forks that go like this, and I got like Fibbo running through everything, and it's like my chart looks like this, and then I throw, a whole bunch of other stuff on here, that gets confusing for me. I like to just really work with 1 or 2 forks max, and then I'll set traps accordingly. But if I can't read it, what's the point?
All right, so look, guys, you've got to get the formula down. Clay said don't be spoon-fed. So when we give you the formula for one, you have to listen because it's the same formula. You just have to do the simple math. So we can't ask, how do I get a 30-minute EMA on a 5-minute chart? You want to know what the EMA is. So if I want to put the EMA, the 30-minute 62 on a 5-minute chart, how many 5-minute candles in one 30-minute candle? 6. So 6 times 62 would be my 30-minute 62 EMA on my 5-minute chart, or a 372. So learn that formula for upper coming down. Now if I'm going to go down going up, I divide. If I'm going from a 1-minute to 5-minute, I'm going to divide. If I go from 5-minute to 30-minute, I'm going to divide. Okay?
Okay.
Let me see here. So let's talk just a few minutes about money management. So Clay's being very cautious, as I asked him to be, in terms of money management, because again, we have to be careful what we say. But there are multiple money management schemes. If you're trading a buy into the sell on a 15-minute wave and you're getting in on a 5-minute retrace, You can write it to a 5-minute convergence. It may or may not be the 15-minute convergence, but you can watch. You can see, just look and see what it is. You can go from a 5-minute buy into the sell. If you're buying into the sell, if I'm buying a retrace pullback, if I'm buying a slingshot, I can write it into the next convergence. So that's one money management scheme. Okay. We've done many sessions on the Hall. So there's Hall sessions.
Mm-hmm. I mean, here on this one, I've got the 5-minute hole inside this green line right here. And then I also have the 15-minute hole, which is this whole section right here. It's all green.
Right.
So it depends on what you want.
And so look at that at the top. Where's the 15-minute section turn red? So if he did a buy into the sell anywhere in there, that's his exit point up there if he's using the 15-minute hole.
Yeah, so if I entered right in here, any of these, I'd wait till that flips red, which is probably that candle right there.
So lots of people are thanking you, Clay. You can't see it, but everybody's appreciating the time you put into the setup for here, into the teaching, and for giving up your time to be here today. Clay's going to be one of several. We've got several people we're working with, and you're going to see more and more of Clay and more of some of these other traders that have been with me a while and have the ability and desire to teach. So we'll be, as I said last week, we'll be expanding our sessions. We'll be dividing it up a little bit more into beginner, intermediate, advanced, etc. So just hang with us, and like Clay said, don't, look, this is going to be like, oh gosh, this is all over my head. Some of you are new. Where do I start? Well, you have to have foundations. So if you're in IML, make sure you take advantage of the academy and learning all the basics you can there. Maybe even go to some Forex 101 sessions. We also talk about Chance and Samantha, do a great job with beginners. And then probably later this week, we'll have our general modules available at certain levels. So the Pitchfork course will be out. We're working on Clay is one of a couple working on a harmonic scanner. It'll be a short course. It won't be a full day course, but just some tips, tricks, and traps for using the harmonic scanner. And then, of course, there's Fast 33. You can always opt up to tab 29. But Pitchforks and the scanner, and then we have Charlie Delta training. So learn Charlie Delta. And then stuff like this, you just file away. You make notes in your notebook. Man, that session on April 8th talked all about Clayway, i.e. 5-minute retrace extremes, buy into the sell, sells into the buys. So lots of different ways you can trade harmonic wave convergence. And, I think you'll enjoy almost all of them, to be honest, but I'm a little biased. Okay, so we covered the Bollinger Bands. We talked about the Hall. There's no PRZs in terms of, it just depends on how far your C to D move goes. If it's C to D and it goes all the way to D, well, then you can end the trade in the PRZ. You can end the trade. One thing that's very important, and I teach this quite a bit actually, is don't trade in conflict. Don't be in conflict with what you're doing. So I don't want to be in a buy and have my RAS so focused on the buy that I miss seeing the sell signals. Because if somebody else would see the sell signals and enter the sell, why would you be in a buy and then be in a sell at the same time? Now, we have a thing called bidirectional trading. We have a thing called hedging once you're in profit, but that's not what I'm talking about here. I'm talking about your RAS so focused on your buy, you're missing the sell signals. So there's lots of ways you can, that's about the only way I can think conceivably that I would use a PRZ. Yeah, well, this is why demo trading is good. And, I talked in the podcast this weekend about keeping your mind open to seeing other things. That it's an awareness thing. You have to put proactive efforts in there. Nothing happens magically there. You have to be proactive and to say, what else is going on here? Am I emotionally attached to this trend line? Am I emotionally attached to this pitchfork? I see a convergence happening. Am I emotionally attached to this being a reversal? Maybe it's going to slide for 50, 100 pips, right? So you always want to be open to other things that can happen So you start programming your subconscious to see them subconsciously. I mean, that sounds redundant, but that's, I'm just being honest. And that's stuff you can't get from a cheat sheet. There's a reason we don't have, I didn't ask Clay to put a PDF together for this, right? Because if he gives out a PDF, you guys are going to circulate amongst yourself, and you're going to try and trade the PDF. All right, and that's not the way to learn. And that's what Clay's talking about. Don't be spoon-fed. Go out and do the demo trades, do the experimentation. In your laboratory, which is your demo account. Okay, for sure. Good stuff. Where are the shadow bands? So
Let me see if I can. You want me to throw them all on there?
No, just go to the indicators and show them which one, because some people are running into the tab 29 ones, which are locked. So show them the ones that are public access.
Are they just SBs?
Yeah.
So yeah, those are the. Let me hold on a second.
It might be MTFA or PC. PCs are going to be locked.
Yeah, those are.
Do MTFA. They're out there. There it is. No, that's HMA. No, it's not spelled out of shadow. Do SBs again.
I don't see it.
Oh, PC is caps. It shouldn't matter. That's the locked ones. I know we have a version out there for. No, now I'm cheating.
Yeah, I'm not sure.
Well, dang it. Let's find them.
Yeah.
Got here. Anybody know what they are? PC shadow bands.
Yeah, I thought they were PC.
But I don't see it there.
Maybe there's no.
Should be space. PC space. Yeah.
There they are.
There it is. PC shadow bands. Not locked. Sorry, guys. Yeah.
Sorry about that.
Thanks for the help. All the volunteered in there. Yep, giving away shadow bands.
You're so good.
I know, man. They don't understand the thousands and thousands and thousands of dollars that. Anyway.
Oh wait, is there an enable code? Aha.
I'm trying to think when that came out. Try 29 for May. Oh, is that what it is, Michelle? Are you sure? It's 4 May 18. Yeah. I'm trying to remember when that came out. So it's 4 May 18. Yeah.
Whoa. There they are.
There they are. Yeah.
Yeah. So you can see I was just running. You can see the difference between what I was just running and what's there. Man, look at all those balances. Love it. Okay. You want me to give this screen back to you?
No, we can close it out from here because this was a good long session, but hopefully you got some value of it. You can watch it again. Clay, once again, thank you for your contribution as always. Clay's a big help, and he helps a lot of people. Like I said, we've got a lot of other people that work with Clay that'll be hitting the education front here, and so very, very thankful for their research and study and their commitment to their personal trading, which then they're kind enough to give back to the larger group. And that's just what you do when you can. That's the sign of a real person. Zig Ziglar always talks about, you get your rewards when you help enough other people get theirs, right? So that's just fantastic that Clay has risen up as a young man in doing this at this level. So very good. So with that, I'll remind you guys, today's Monday, so we'll be back Wednesday If you didn't catch up, there's 2 Disruptive Traders TV sessions posted over the weekend. So last week's sessions were posted, and we have a Trader's Mindset Mastery that was posted. So there's a lot of information there. That's all free. Oh my Lord, free. So get your trading buddies here and get into this stuff. And somebody did mention, thank you. I forgot to give you acknowledgement for it. They were thanking us for showing them how to have income insurance. So yes, that's kind of like what I say about learning how to trade. It's an income insurance, and it kind of gives you a confidence that it doesn't matter what happens in the economy, with your job, with your MLM, with anything else in the world. If you know how to trade, that's a skill set. And the way we teach it, all the stuff Clay did here, these pullbacks, that can be done on gold. We can use it on Bitcoin, pitchforks, Fibonacci, scans, on any market that you want. And so you're not being niched into something that's just particular to the Forex, etc. So, just hang with us. Expectations are appropriate in order to succeed here. Clay might have taken longer than what he initially expected, but look at the result, because he had persistence. He stuck with it. And so if you remember that whatever it takes, persist without exception, no matter what, you'll eventually get there. And, 10 years from now, the fact that it took Clay 2 years instead of 6 months to get where he wants isn't going to matter to him, because he's going to achieve all the stuff he wants to achieve. So if that, I remind you guys, life can be short, and sometimes even shorter than that. So remember, for the people you care and love, let them know you care and love them. I love you guys. I love Clay for being, and all the support. I know rumors are going to fly, and all the support that he gives us. You all take care.